Hello traders, Gary Wagner here, just about 12 noon in Honolulu, 6 o'clock in New York. It is Wednesday, 14th day of March, 2018, and this is the Daily Report for gold and silver. Muted action in the precious metals with only an $8 trading range in gold. Gold closing down about $2.10 at $13.25, and silver down about 8 cents at $16.54. That's all in light of a fractionally higher U.S. dollar, up 11 points, 89.75. Of course, the big news is the third consecutive day in which the Dow Jones Industrial Average has closed lower. Today, losing about 248 points, closing well below 25,000 at 24,758. Bitcoin also falling out of grace, losing about $800+ and closing at 8236 and 8300 in the CBOE and CME futures exchanges. Traders, gold is trading in a very narrow and muted trading range with only about $8 separating the intraday high from the intraday low. Low today in trading was 1321.70 and the high was 1330. It closed at 1325.40, putting gold pricing down about $1.70 on the day. What is significant about today's trading activity, if anything, is the fact that the intraday high quite eloquently matches the 50-day moving average, and although the market was able to trade up to that particular price point, it was the 50-day moving average, at least on a technical basis, that provided extreme resistance, moving the market back down to lower pricing. Of course, traders are awaiting next week's FOMC meeting, as well as keeping a close eye on the equities markets, which have been trading lower throughout the week for the last 3 consecutive trading days. The dollar offered very little assistance, trading up 12 points today and closing at 89.75. And the only noteworthy aspect of today's trading is the trading range, because for the first time in 6 trading days, we have seen gold close with a higher high and a higher low than the previous session. We've not seen that since this large green candle here, which of course occurred last week. Therefore, my forecast remains unchanged, looking for neutral to lower pricing in gold, and my current assessment is that we have resistance still occurring at 1330, the 50-day moving average, and then above it at 1336, with minor support at 1317 and major support lining up with the 100-day moving average at 1302. And as we spoke about in our opening letter, gold traders are effectively keeping a close eye on U.S. equities for any signs of a further decline. As you can see on this daily chart, we have had 3 consecutive days, Monday, Tuesday, as well as today's trading activity, taking the Dow Jones Industrial Average lower. You can see a couple of occurrences of a 3-day sell-off right here, as well as right here. But to have 3 consecutive days in a row is a fairly rare occurrence. We've only seen that unfold over the last, say, 6 months on 3 different occasions. Also, we are trading just above the 100-day moving average, and so a further decline and or a break below the 100-day moving average on a technical basis would be significant, and it would indicate the potential for dramatically lower pricing, possibly moving as low as the 200-day moving average, which occurs roughly at 23,239. Silver is also trading under minor pressure today, closing about 8 cents lower at $16.55. What is interesting in terms of the technical studies is that we have a further and accelerated tightening of range. We can see that over the last couple of trading days. Today is truly an inside trading day, meaning both the high and the low fall within the range of yesterday's trading range. And there's no doubt we are getting extremely close to some sort of apex on this compression triangle, which could certainly be a precursor to a dramatic release of energy. And although chartists typically will look for the breakout to move back to the prevalent trend direction, it does not rule out either a substantial move up or down once silver pricing reaches the apex of this compression triangle. My recommendation is to maintain our current flat position. I still remain neutral to bearish on silver. And traders, lastly, I do want to take a look at cryptocurrency Bitcoin as it relates to futures trading on the CBOE, trading down about $839 today, a net decline of over 9%, so a sizable move, currently fixed at 82.36. If you recall from the last couple of days, we have been looking for this decline to continue. Of course, the decline began at about 11,000, and our target has been 8,000 on Bitcoin currency. The interesting factor is I've just put in a very, very short-term Fibonacci retracement accounting for this last rally, which begins at 6,000, concludes above 11,000, and the 61.8% retracement comes in at 82.01. And so therefore, we want to look to see if in fact we can get any kind of bounce here and it finds some support. If the market continues to trade under pressure, we would revise our downward call to about 72.42. That results at the 78% retracement, but also we want to look to see if there's any kind of recovery or upside bounce in this area based on the fact that Bitcoin is now traded to a 61.8% retracement of the most recent rally. Now, the Senate is holding hearings today, and the crypto advocates are pushing for regulation that could be creating much more uncertainty in the market, which is one of the primary reasons that we have seen this market trade lower. They're advocating regulations to be implemented because they do not want to see these coin exchanges move out of the United States. I remain neutral to bearish on Bitcoin futures. However, we are looking for the potential for a recovery because of current pricing. Traders, there was an announcement made by the current administration that Larry Kudlow is going to be the next chief economist coming in to replace Gary Cohn. The most interesting statement to come out of his first sets of talks, so to speak, is that Trump favors a stronger U.S. dollar. Now, that is an interesting component because if that comes into fruition, of course, that will put pressure on gold, silver, and any commodity traded or paired against dollars. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.